following of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, it's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, it went up to $420 last night.
Now, Tom O'Brien.
Hello, everyone. This is Teddy Keckstedt from Forex Trading Unlocked. I'm filling in for Tom O'Brien today on this Friday afternoon. And today we're going to talk Forex. Maybe I'll get the video going right, but I think right now we definitely have the charts working. So we're going to look at the dollar index right now. The dollar index yesterday and today have gotten some nice bullish momentum going against some of the major currency crosses. However, the overall trend for the dollar index is lower. And unless we take out this last lower move high that we had a couple sessions back around the 97,601 area, I think you're going to see that the dollar index is probably going to stay under pressure. The overall trend is lower, and the real way to break out, if you're going to change in trend and become neutral to higher, we'd have to get back above this 97,824 level. But right now, it doesn't seem like we're going to have that type of momentum. I think today and yesterday is just more of a profit-taking type of rally that we have going on, and as you can see, we really have more of a sideways posture over the past few sessions. All right, so now that we have a little bearing on the dollar index, let's start to look at some of our currency crosses. So we're going to start out with the U.S. dollar Canada, which overall has been in a bear trend. Let me extend this chart. You can see it started as more of a sideways to lower trend, but then ever since the end of November, it's been pretty steep for the bears, gaining momentum, especially as we headed into the end of 2019. Now we've set a nice little bottom here as the year started out here in January. We had a nice little rally, a little corrective move, and then here we've been going sideways also for the past basically 1 week trading. So if you look at it, we have this caramel line here. This is a pivot point at $1.3041, which I think is going to be a really big directional bias right now. I think that above it you're going to find a little bit of support, but it's going to be more of the same. I think you can expect more range trade activity from this pivot point up towards that last lower move high at $1.3106. Now if we can get a breakout above here, then I think we can get some nice little momentum and get another buying frenzy to extend this correction up towards this $1.32.5 area and this downward sloping resistance line. Now remember, the trend is not that steep, so for it to be sideways to lower and to have a nice correction up there and then run out of gas, that would kind of fit the symmetry of the current trend lower that we have had. Now we have a lot of things fundamentally and technically going on in the Forex markets as far as Brexit, and we had a trade deal with the U.S. and China, but for the U.S. Canada right now and for the Canadian dollar, we're really looking more just at their basic markets and the numbers that come out, and nothing has really been anything to really excite. The only thing that we can really get a bearing on is that the U.S. dollar index has been under pressure. So when the dollar index is under pressure, it seems like the U.S. dollar Canada starts to sell off. But right now we have a little bit of strength that's showing in the dollar index, so that's kind of giving a little lift to the bulls right now for the U.S. dollar Canadian cross. So I think you're going to have a sideways to maybe a little bit higher, like I said, make a challenge of this last higher or lower move high, but nothing really too exciting above that. I think if the dollar index especially starts to erode once again, then be very careful trying to be a bull in this market, because you're probably going to see it fall back below this $1.3041 pivot here, this caramel line, and then it resumed the downtrend, which has been, no matter what, pretty severe over the past month and a half. And if we come back down towards this low here at $1.29.5, where we set back at the end of 2019, well, then all bets are off, and the trend definitely, I think you're going to have a little issue trying to find support. So, and that would probably be because of the U.S. dollar index also selling off. So we'll see how this trade unfolds over the next couple weeks. But right now, it's definitely a range trader's delight and a swing trader's nightmare. And like I said, I don't think your expectations to the upside are going to be very much your expectation should not be that much to the upside, because especially if the dollar index falls under pressure, and we'll look at these other currencies and you'll start to see what I'm talking about as far as the possibility of that. So we're going to look at the US dollar, Japanese yen now. We had the US-China first phase one of the trade tariff new deal signed this week, and it seems like the markets are pretty happy with it. Now, the Japanese yen has not been doing well against the dollar overall for quite some time here. So if you look back, this trend overall has been a bull for the dollar versus the yen, and that's in the midst of the dollar index and the U.S. dollar being under pressure versus most of your major currency crosses. So this trend, no matter what, has been a bull. Recently, we had this lower move or higher move low that was stamped in with a violent rally back to the upside, where we've now followed through over the past few sessions to press on to higher move highs. So this is a really good indication that the US dollar yen, no matter what the dollar index is doing, is a bull. It's a very strong bull, but not necessarily as far as like going for price action to the upside, as far as like exploding. Like we came off of this low, but look at where we really ended up. We finally broke through or breached this resistance area where we had trouble getting above for the past couple months here at this $109.538 pivot. And that's what I think we're going to do now. Is this is how we were grinding below it. It was pressuring resistance. We're just starting to set the stage now, probably getting us back up to around a 111 to 112 area, and then 113 being the extreme over the next, say, month and a half, and then kind of lift this range. Because even if the dollar index is strong, let's say that the dollar index starts to turn around against most of the currencies, that's going to help fuel this rally even more. Because when the dollar index has been strong, the U.S. dollar has gained against the yen quite significantly. When the dollar index is weak, this market doesn't sell off that much. So that's usually when you see a little bit of a corrective move before it bases and then starts to get another rally again, even in the midst of a weak dollar. So for your trend traders, I think if you're a bull, look for buying opportunities, or if you're already in it, just kind of work it. We've made a series of higher move highs and higher move lows, so the fundamentals are all there. The trade deal is also phase one is done and seems to be okay, so that's also favoring this trade. But now we have some other currencies in that trade zone that are acting a little differently. We have the Australian dollar, US dollar, that has been in an overall bullish trend now for a couple months, and as of late came off a really nice high right at the end of the year, and then started off this year with a very big corrective slide, where we had a nice bottom a week and a half ago, and now we've been kind of chopping a little bit higher. If you see how the market right now today, it's falling right on this upward sloping support line. So we found really good support there today. Ironically, the trend is holding up there. We're not making a newer move low, but we did make a lower move high. So the question is this lower move high just the first stop before we gain momentum and get a rally back up to start challenging this 70.33 area where we made this extreme high up here? So our main pivots to key off of right now over the next few sessions, I think, are the first breakout point to the upside would be the high from yesterday at 69.35, and then we have the low that was established a week and a half ago here at this 68.48 level, and I think that would be where yes, those would be the breakout pivots, and then only if we do have a failure here at 68.48 will we start to be on the neutral to bearish outlook.
For stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find market insights under trading newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, everyone. This is Teddy Keckstedt back filling in for Tom O'Brien, and we're looking at the Australian dollar, U.S. dollar. So we already spoke about the dollar index and how it's has a nice little bit of momentum to the upside over the past couple sessions, but as a whole, it's pretty bearish. And we looked at the U.S. dollar Canada and the U.S. dollar yen and saw where that relationship is, not really helping where the trends are. We know where those are at, but it's tough to find a trade. But with this one, we have a little trade action that we can look at. So we had already came off of this higher move high up here at 70.33. So if we can get a breach of the high from yesterday's session at 69.35, I think that you're going to have a really good chance at within 1 to 3 sessions making another run at higher move highs and keeping this trend in place. So now, as far as if you are a bear, then right now this area here would be a very aggressive opportunity to look for lower move lows, but then you want to key off of that high from yesterday for sure if you're a bear for your risk. You don't want to be short above that level. If we take out the high from yesterday, it's not going to happen today. The markets are closing soon, but at Sunday or into Tuesday, Wednesday, if we get a nice rally and we take out the high from yesterday, then most likely that's proof in the pudding that the bulls have control, and then they're going to make a run for the 70.33 area. However, like I said, if you are a bear and you're short against this level, then especially because we're hanging right on this upward sloping blue line, the support line, if we close below this, and especially if we open on Sunday night and into Monday, start to trade and pressure this new move low, then you'll probably find some stops there, and then we'll see the market start to trade in a sideways to lower posture. Now, if this would occur, we probably, because of a big rally going on in the dollar index, There is, remember, the impeachment trial that's going on in the United States. The phase one of the U.S.-China trade negotiations are beneficial for Australia and the Australian dollar. So now I think it's just a question of, do we have dollar strength or dollar weakness that's going to help to generate this trade? So we'll see how that happens as far as the fundamentals come into play, as far as geopolitical variables, as far as the economic numbers that are coming out. They've been fairly decent and positive to help maintain the Australian dollar, U.S. dollar trend. But since we are playing with these support levels here, and especially if we can take out the 68.48 level, well, then that changes the fundamentals, because that would mean that if we take out this low, that we're making not only a newer move low, but that would confirm that this high from yesterday's session was in fact a lower move high, setting the trend for a lower, at least a sideways to lower trade for the Australian dollar, U.S. dollar, probably for the next week or two as we head into the end of the month. So now the trend has been lower for the majority of January, and a lot of sideways action. If you look at the closes for the Australian dollar, U.S. dollar, very similar to the Canada, how it went sideways. So now probably the main reason for this week's action, for the sideways action, and not much of a difference for the openings and closes, was probably because of the anticipation of the trade deal between the U.S. and China. So now that that is over and we have time to absorb it, especially over the weekend, it's likely that we're going to start to see a swing trade form in the Australian U.S. dollar. So this is the first currency that we've looked at this evening, that going into the new week, that we're probably going to see some opportunities. So once again, for your bears, we know where you're at. And then also, if you're an aggressive bull, then you know that also this swing low down here from a couple weeks ago at 68.48, this is your risk level. You don't want to be long below here, because below here it's going to start to gyrate and be probably a choppy to lower trade. So if you're an aggressive bull, this is a good area where we're settling at right now today. And also, if you're a bear, it's not a bad selling area either. Just use these pivots as your risk levels, because like I said, either way, a breach of the 69.35 upper resistance level most likely is going to fuel bullish momentum. And likewise, if we fail here at the 68.48 support level, then we most likely are going to have a lot of selling pressure that's going to kick in as we start to make newer move lows, which fundamentally sets the new trend direction. And we'll probably get all the algos and bells and whistles flying all, off par and get some volatility. So I don't think you're going to see a lot of sideways action like you had for the majority of this week going on in the Australian dollar, U.S. dollar. So let's look now at the New Zealand dollar, U.S. dollar. Now this one is another market where I think you have some opportunities for some swing trading. If you take a look overall, you can see that it rounded out a nice bottom in the beginning of the fall and started out with a nice slow trend. And then from the middle of October all the way through the end of 2019, the steepness of this rally really got pretty strong. So we had some nice buying momentum, and now we started out January like a couple of these other currency crosses where we are starting to fall back against the dollar, and now we're falling on some critical support zones. So we set a low 2 sessions ago, which kind of falls in line with this trend line here. If you look at this coming back from November as this rally really started to accelerate. So coming back to where it found support yesterday and where it is today, trading in this area, kind of keeps it in an area where you're starting to think about, is it going to base here, or is this the pause before it starts to test support some more? Obviously, we're going to key off now for support is going to be the low from 2 sessions ago, which is here at 65.84. If we have a failure from this level, then I think we're going to test this last higher move low here, and also this higher move low here. These would be your 2 extremes, I think. Only if you fall below this last one here at 65.19, that's where I think you have your definitely change in trend confirmation as far as being very bearish, because the overall trend for the New Zealand dollar, U.S. dollar, even when the dollar index was strong, was this market was stronger. So it seems that where there may be fundamentals, there's always fundamentals and technicals that drive every single market and correlation. But right now it seems that whatever fundamentals are involved with the New Zealand dollar versus the U.S. dollar, there are more bullish fundamentals. It's not a technical rally. So this, as long as that's in place, and as you can see that we came off of this higher move high with extreme at the end of the year, and now we are setting a higher move low. So unless we continue to take out support and pressure these lows. Right now, we're looking for a basing opportunity, and then the question is, are we going to make a lower move high and then start to come back and test support, or are we going to make a run for the high here at 67.56? So the way I'm looking at it, because when the dollar index was strong, this market was stronger, and when the dollar was weak, this market was just really blowing off against the dollar. So I think you have to key off the dollar index, like we started off this video today, looking at how the overall trend is weak. The dollar index right now still has to be viewed as in a corrective rally, and if that's what is going on, if the dollar index is only in a corrective rally and it starts to fall apart again, then you're probably going to see bullish momentum start to build once again in the New Zealand dollar, US dollar, and we're going to start to make another run up this blue support line and make a challenge of this 67.56 area. And once we if we do get above there, well, then all bets are off, and I think you have the ability to drive this currency all the way up to the 68 to 69 level. This obviously would be something that would take probably a month and a half to 2 months to unfold. This market has been a bull, but except for a couple days, like here, this one big extension and this one over here after it set this low. For the most part, it was grinding higher and had some nice uptrend days, but nothing really extreme. And then as far as down days, you've had also not very extreme. The average range has been pretty consistent as well. So even if you trend with these ranges, you're looking at taking a good month and a half to ride this trend.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
everyone. This is Teddy Keckstedt back filling in for Tom O'Brien, and we left off talking about the New Zealand dollar, U.S. dollar. So now let's talk about a couple potential trade setups here. So we already just defined the trend as obviously being strong and being in a corrective slide versus the dollar. So just like we started off this video today with talking about the dollar index being in a potentially right now a corrective rally. So if the dollar index is in a corrective rally and this correction is going on, it looks like this one here is trying to set a bottom. So let's just say that this is a short-term low here from 2 sessions ago, and if this holds, then we have a good chance at riding this trend up. Okay, so the low from 2 days ago would be our risk level for aggressive bulls here at 65.84, and then I would say as far as what your risk level will be somewhere down here from the 65.55 down to the 65.19 level. Only if we fail from this last higher move low here would I think that the trend is obviously in a definitely for sure neutral zone, a neutral trade, and then any rallies at that point would be looking to not necessarily be corrections, but definitely not to have very much follow through. But the overall trend for this market right now is bullish. So I think that you have for bulls, you have a very good opportunity to scale in on this correction. Remember, it's Friday, so the market is giving you a little chance here. It's hanging on support. We don't know what's going to happen on Sunday into Monday morning when the markets open up. Asia opens up, and those people will be trading, and the liquidity always starts over in that trading zone. So if it starts opening lower, you might have one more chance to buy it down before it gets a rally, and I think that will be probably one of your last opportunities. So if the dollar index, however, if we have a big sell-off, say in the euro and the pound and a couple other currencies, and you get a rally in the dollar index, then you might see this current correction in the New Zealand dollar still get pressed into these lower support pivots. Now, if you are a bear, you're already doing well this the past couple of weeks, but it has been a grind lower for you. I would key off of the high from yesterday if you are selling this market right now, because if we have any rally above this point right here, and I'll put a little, there we go, this little pivot right here. If we take out the high from yesterday, that would confirm what? That would be higher, another higher move high, because right now we are setting this low, and the question is this a higher move low in the intermediate trend? And if it is, then right now we're looking to buy into the breaks right now and look for a challenge of this 66, 68 level. And if we do get a rally above here on Monday or Tuesday, then you're really set up to continue the trend higher and challenge the 67, 56 level up here and make newer move highs for the overall trend. Remember, the trend is your friend. Overall, we've been making higher move highs and higher move lows. This has been a pretty organized correction lower. Is it going to still swing lower and drive support a little bit? We don't know yet. But remember, the one thing that we were talking about before the break was that when the U.S. dollar was strong against other currencies, it wasn't strong against this market. The New Zealand dollar was a bull against the dollar. So it was only when the U.S. dollar became a bull against all currencies, and a lot of that had to do with the Middle East conflict that we had over the last couple of weeks that died down a week ago. So now that we've absorbed that and we have the trade deal that's happened, which also benefits this area of the world and this trade zone, it's very likely that we're going to be bottoming here over the next two couple sessions. Okay, so we have a caller that wants you to look at the peso. Okay, I can do that. Let's see. We'll look at the U.S. dollar and XN. So where is this going here? Well, this doesn't look so good. It's slamming the lows here as we speak right now. So pretty funny how we were talking about how the dollar is strong. Well, the dollar is not very strong against the peso. So I guess for those of you who are looking to go on spring break coming up, or if you have kids that you're going to send there, your college kids, you might have to have, well, hopefully you've already bought your pesos. If not, they're not going to get such a good deal going into spring break. All right, so you want to see what's going on, the overall trend here for the Mexican peso. We're going to do this live on the fly for you. The other charts, we at least had some setups. All right, so here we go. We can confirm, obviously, we have a downtrend with a series of big lower move lows and lower move highs. So the question is it bottoming? Well, you don't want to try and catch a falling knife, my friend. So for the caller that is asking about this, I guess, I don't know, if you're planning on going to Mexico, maybe wait. But yeah, if you're trading the Mexican peso, as far as trying to find, if you're looking to buy it, I would say wait for a signal. Right now, there is no reason in the world why you would want to look to buy it. As far as if you want to sell it, well, this is, I don't know if you'd be selling it in the hole here or not. The trend here is very steep in the short term. Let's take a look at this. So the overall trend isn't bad. Right now, you're looking where you could come into an area and find some support and drift. Let's take a look at the monthly here. See if we can, okay, here, let's get rid of these lines here. This gives us a little bit better of an idea. All right, so if you're looking for support here and you're looking for an area to buy, ooh, that's going to be really tough. That's going to be really tough because you're looking, okay, right here. Yeah, you're right here. That's right. We're sitting right now just above some really key support there, and it doesn't look like it wants to bounce. It looks like it wants to really come make a little test of it over here. Now let's see. We got another pivot here. Here's some targets for you. So we have this here, I would say, would be your real big line here. If we got below the 1788, so you have about not quite a full dollar to go yet, that would be very bearish for this currency. Now, as far as the trade deals that we have going on in place, how do they affect the Mexican economy and stuff like that? That remains to be seen. If you look at this on an even bigger scale here, let's break this down. You could say this is kind of a dilapidated head and shoulders here, where this would be the head and this would be your kind of last shoulder, sort of. It's not exactly the prettiest one, but it's kind of, if you look at it right here, this little spot here, let's get this right here. Yeah, this would kind of look like that. Let's see how this came into this spot right here too. Okay, so here we go on the monthly. Last month we settled below this trend line here. So yeah, this is definitely bearish, my friend. If you're looking to trade the peso, I think that you still have a good chance at coming down to this pivot here at 1788, and then your next line for target would be somewhere right around here. So yeah, I would say this would be your target zone right now. But this is going to take probably, I would say, at least 1 to 3 months to come down into this area. This is not going to trend, I think, that extreme. And this is also counter. Now, this would go also with the dollar index. If the dollar index does start to fall apart, which is something that we're looking for overall over the next few months, then that would help to fuel the bearish slide that's unfolding here in the Mexican peso right now. So I don't know if I've answered your questions, but if you're looking for trades, let me give you this one here. So unless we get back above this 2026 area, which then you're looking at, that's some big resistance, I don't think you're going to see much upside action. In fact, that might cap it, and that might be the excessive or the extreme for a bullish target if you are bullish. But right now, like I said, I wouldn't try and catch a falling knife. Let's break it down by the weekly. Yeah, that looks pretty bad. And then we look at the daily too. Yeah. So most likely we're going to come down to, I think, yeah, we're going to test this it's 1859 level probably first. So if you're still looking to if you're looking to buy it, I would look to buy it lower around that area before you start to look to scale in for that kind of a trade. Otherwise, if you're short it, I would definitely look for some swings. Any rally right now, I would look as a rally.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Hello, everyone. This is Teddy Keckstedt back again, filling in for Tom O'Brien. And we were just looking at the U.S. dollar, Mexican peso for one of the callers. And we were looking at how this is a very bearish trade right now. And as far as buying it, you don't want to try and catch a falling knife. That'd be a very dangerous trade. However, if you're looking for an upside breakout target, I think that if we were to get a bounce here and along this 1859 level, you might get a challenge back up here at this 19023 area. But this last swing low, swing high rather, lower move high, I think is probably going to be about as far high, about as much as you're going to get, unless you start to see a really big turnaround in the U.S. dollar as far as strength against most other currencies. But the way we were looking at it, this thing looks like it's a major bear, and I think that you're probably going to see this trend continue for the trading environment for the next couple quarters with the way this was shaping up, the way we looked at the monthly chart. It looks very bearish. And this is kind of the thing that has been giving me the reason why I'm bearish the dollar index overall, because you have certain currencies that are just, it's not happening. No matter what happens, the dollar just can't gain any strength. Just like we just talked about the New Zealand dollar, U.S. dollar, then here we have the U.S. dollar versus the Mexican peso, which is also one of its trading partners. And remember, we looked at the U.S. dollar Canada, which is kind of ironic when you think about NAFTA and what have you, that the U.S. dollar here is also losing against the Canadian dollar in the overall trend. Now, this one isn't quite as extreme as with the peso, but it's showing that right now the U.S. dollar is losing strength versus its North American trading partners. How that's going to impact the rest of the trading year, we'll see, but there might be some kind of swing trades that are going to form because of that. So now let's talk about the European currency crosses for this last segment here that we got going on. So what are the big things that we have to contend with? Well, we know that January 31st here we have the Brexit that's going on. The first stage, the UK will be officially leaving the EU, and then they will have until December to hash out the trade agreements as far as how that will move going further. That stage will probably go on for years. That's just my guess because Brexit's been going on forever. So, but at least we do have this target date. Now, why is that significant? Well, we're probably going to start to see a sideways trade develop in both the euro and in the pound as we get closer to January 31st. So there's 2 trading weeks left right now. Obviously, we see the euro is slamming on support. But look at this. The low that was set a week and a half ago here at $1.1083 is still holding. Are we going to take it out over today? Probably not. Is it possible Sunday into Monday? Very possible. But then we start to test, we start to look where we might start to test this $1.1066 level. This is our last major higher move low. So if we fail from here, that also has us coming through this upward sloping blue line, which is the main support line for the trend. It's not a steep trend, so it's it's a very manageable bull, if you will. But right now it looks like it wants to be more negative and sideways than it does want to get to make a run for resistance. So the high from yesterday is going to be another level to key off of. So as far as if you are a bear or a bull, then what kind of a trade can we play with this right now? So your expectations, I think, are where you have to really rely on your judgment on whether you want to place a trade in this currency. Like I said, the euro and the pound are very likely to start to go into a sideways trade going into Brexit. If that's the case, range traders are going to have a delight. Swing traders are going to have a nightmare. So if you want some swing trades, then I would say, look, you want to just trade it fundamentally. Right now, the market is in an overall bull pattern. We've made a series of higher move highs and higher move lows, except for since we've come down from this last higher move high. So we've made a series of lower move lows and lower move highs. We set this low here at $1.1083 and this high at $1.1174 as our upside and downside pivots for our highs and lows for looking for breakouts. Now, the thing that you have to think about is that the low, this was a higher move low, so if it goes with the overall trend. So if we fail from there, that's what helped to accelerate a slide and give us a test of, like I said, this $1.1066 level. How far down can we go? Well, that's the question. So even if we do get a slide below here, this is a corrective break in a bullish market. So we can't overall say that this is the beginning of a bear market for the euro-US dollar, especially with a dollar index that doesn't seem to have that much support. So right now, if the dollar index is in a correction, then also you have to view this, like I said, some of the other currencies before, that this current break is a corrective move. So right now, we're probably in a very good buying opportunity area if the bullish market and the bullish trend stays and is maintained. Now, if it's the beginning of a sideways to lower trade, well, then we're looking at some potential nice bearish trades. But then, like I said, then you're going to have to look for swing trades to the upside, corrective moves to the upside. Because as far as what is your expectations for what kind of a move can you expect? Well, look at today's trading range. We're trading at $1.1091, and we had been, let's see, the high of today was at $1.1142. So we have a 50 pip range. Not that extreme. Like, it looks pretty nice on this chart, but if you think about the average true range, 50 pips in one of the biggest currencies on the planet, it really isn't anything. It's actually a pretty quiet day. So your expectations have to, that's why I said you have to think about looking to go sideways going into Brexit, because if we have only a 50 pip range on a day like today, on a Friday when we're trying to hammer on support, what does that tell you? There's not much, there may be a lot of volume, but the volatility is low. And without volatility, you're not going to be able to keep on maintaining swings. So let's look at the British pound US dollar. Let's see, GPB, BP, USD, there we go. Sorry about that. All right, so now this market has definitely been in a sideways outlook for the past month and a half now, since December. It's really just tightened up, and it's because this is the major currency involved with Brexit for the UK. It just stands to reason that this is the one that would start to narrow. one of the things we have to look at with the UK right now is that, except for Brexit, there's nothing really jarring it fundamentally as far as geopolitically, because that is the main focus. As far as economically, the EU and the UK have they've beat numbers over the past month and a half, 2 months. So there's no reason to not be supportive of their currencies as well. Now the question is, how does it fare versus the dollar? Now, interestingly enough, this market has been pretty sideways for the past couple of weeks, but it has been sideways to lower, going with the whole thing with the dollar index. This has been, since this is one of the biggest weights in the dollar index, it stands to reason that since the euro and the pound have both been retreating for the past 2 weeks, that has helped the dollar rally. Now, here's the big question: is if the British pound starts to go sideways, and if the euro also continues to go sideways over the next 2 weeks, where does that leave the dollar index? Well, it doesn't leave it very much, because the two biggest weighing currencies are very likely to be somewhat unchanged over the next 2 weeks, or relatively close to where they're at right now. So we have to basically go with the fundamentals here if you want to look for a trade and see if one will manifest. Well, remember, the overall trend here is a bull. We made this last higher move high back in December. We fell back and made this higher move low, and then right before the end of the year, starting out the new year, we set this higher move low.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
everyone. This is Teddy Keckstead filling in for Tom O'Brien here, and we're getting ready to wrap up the show. And we were looking at the British pound US dollar, so let's see what kind of a trade possibilities we have here. So like I said, we're looking for a neutral to sideways trade going into Brexit, and then I think we'll start to see a swing trade develop, most likely to the upside. Remember, the overall trend is up. We've made a series of higher move highs and higher move lows, except for this little area here over the last month and a half. So the question is this high right here just the beginning of a trend higher where we challenge this 135.09 area, or was it a lower move high setting us up to make a lower move low and take out this lower pivot at $1.2901? So these are big pivots to look for, this last major higher move low and this lower move high. These two right here I think are your breakout areas, but until we get through Brexit, I would be very cautious and think that most likely we're going to go sideways. So if you're an aggressive bear, I would say you can be short right now, but then I would key off of today's high, literally, as your risk level. Anything above there sets us up to go higher. And then if we have a failure from the low from a few sessions back here, then I think that it puts us right down on to challenge this little support band here at $1.2901. Then all bets are off, and we are going to look at, obviously, to continue to ride support. However, the overall trend is up, and remember that we also had a big support area over here for a few months just below where we're at. So I think right now what we're doing is where resistance became our little breakout area, now that has become support, and that's what we're looking to test here. So now the last market we're going to look at is the US dollar Swiss franc. And this is the one to really look at. This currency, if you want to look for some action, this thing is a bull versus the dollar versus every currency. So right now it set a nice little bottom yesterday. So for aggressive bulls, I would say right now you can be long against yesterday's low. You do not want to be long above that or below that area here at 96.12. So right now we're looking for a challenge of this downward sloping blue line and a rally up to test this 97.62 area. This is a big pivot here. If we